Welcome back to Iraqi Dinar News, your trusted destination for accurate updates, financial breakdowns, and everything related to the unfolding revaluation of the Iraqi dinar. If you're tuning in today, you're catching one of the most pivotal developments we've seen in months. With global financial shifts accelerating and Iraq's internal systems evolving rapidly, yet most of the public remains unaware. As of June 26, 2025, we're diving deep into insider revelations that suggest Iraq is on the cusp of a strategic currency overhaul with a digital transformation that could shake the global forex market. Speculation about the Iraqi dinar's revaluation is no longer confined to hopeful rumors. In fact, recent digital salary mandates in Iraq and insider reports point to serious groundwork being laid behind closed doors. Intel figure Fenu Enu offered a grounded reality check, stressing that any potential revaluation won't arrive with flashy headlines or viral social media buzz. Instead, he describes it as a silent pivot, one happening under the radar designed to catch the world off guard. Though personally optimistic, Fenu warns others to avoid unrealistic fantasies that often spread in online communities. Meanwhile, Frank26 has provided updates tied to an upcoming change in how Iraq pays its government employees. Beginning in July, all wages will reportedly be distributed via digital payment cards, with eligibility limited to those officially registered in the digital system. This strategic shift is expected to coax hidden cash reserves out of households and back into Iraq's banks. Frank suggests that the U.S. Treasury may even be indirectly supporting this initiative to stimulate liquidity and improve money flow throughout the country. Marxi links this development to broader banking reforms under Iraq's white paper strategy, which outlines a transition toward modernizing the entire financial framework. According to him, these updates represent a critical final phase before a full economic transformation. Bruce, another familiar name in the community, echoed this outlook over the weekend, speculating that actual exchange procedures might launch soon, perhaps even within days. In parallel, geopolitical positioning continues to evolve. Sampson highlighted reports portraying Iraq as a potential intermediary in U.S. tensions, possibly hinting at Baghdad's expanding diplomatic influence. However, IMNU raised cautionary flags based on reports from Amouij News, indicating Iraq's airspace remains closed and the peace being presented may be more appearance than reality. According to IMNU, until true stability is secured, a currency revaluation remains out of reach. Sandy Ingram reinforced this cautious stance. She explained that unless Iraq implements deep structural reforms across political and fiscal lines, particularly those aligning with IMF guidelines, the dinar's path forward will remain speculative. She emphasized that true currency strength is tied to genuine change in oil policy, governance, and institutional integrity. On the other side of the argument, both Claire and Frank26 continue to highlight Iraq's growing foreign exchange reserves, economic improvements, and the groundwork for a potential boom. Frank estimates that these reserves could justify an initial revaluation rate near $3.00, allowing the dinar to float internationally and fuel sustained growth. He added that key financial institutions such as the Central Bank of Iraq, CBI, are now operating under dramatically improved conditions. Past issues like corruption, financial mismanagement, and internal power struggles are reportedly being addressed or eliminated, paving the way for long-awaited structural shifts. But even as momentum builds, lingering concerns remain. One of the most frequent questions asked is why the Iraqi dinar still isn't freely traded on the global stage. Sandy Ingram offered a straightforward explanation: strict capital controls. Iraq enforces regulations that prevent the dinar from being easily exchanged or transferred across borders. This lack of mobility makes it less appealing to international banks and investors. Years of conflict, sanctions, and economic instability have left a lasting impression on global confidence. In addition to capital restrictions, Iraq still struggles with credibility in international markets. Decades of internal strife, divided leadership, and recurring fiscal uncertainty have painted the dinar as an unstable and risky asset. Many global financial institutions continue to view Iraq as a high-risk environment. Even though significant steps are being taken, full market confidence is a long-term goal, not an overnight achievement. The third issue often mentioned is compliance in international sanctions. The U.S. government has expressed ongoing concern about the risk of U.S. dollars filtering into sanctioned countries like Iran through Iraq's banking channels. These concerns have led many international banks to tread carefully or avoid involvement with dinar transactions entirely. Adding to the complexity is the absence of any offshore infrastructure to support large-scale foreign exchange activity involving the dinar. Unlike currencies such as the euro, yen, or even the Vietnamese dong, the Iraqi dinar lacks the back-end systems needed to enable fluid and active trading on a global scale. Clearinghouses, daily exchange platforms, and liquidity support networks are either missing or underdeveloped. Still, progress is undeniable. Fanu Ainu acknowledged that while the journey is far from over, momentum is building. Iraq is slowly integrating with international frameworks, improving financial infrastructure, and showing signs of seriousness in aligning with global institutions such as the IMF. Caparoni, a longtime observer of Iraq's financial evolution, pointed to upgrades in systems and increasing conformity with international regulations as evidence of a more stable path ahead. Frank Tusk shared insights into his dealings with the Bank of New York Mellon, the powerful financial institution that serves as a correspondent bank for the U.S. Treasury. This institution oversees more than $54 trillion, 0 cents, in global assets and does not operate in the conventional retail space. Frank emphasized the need for a respectful and strategic approach when speaking to representatives from such institutions. He cautioned dinar holders against using speculative terms like RV or revaluation in discussions. Any whiff of unfounded financial optimism could lead to immediate dismissal or blacklisting. During his interaction, Frank presented his currency holdings as part of a family inheritance and asked about services suited for a family office structure. He was met with questions from a Series 7 certified financial planner who focused on his financial objectives, background, and future plans. Frank's experience illustrates how careful framing, legal documentation, and professionalism are crucial for gaining access to elite financial support. His takeaway: speak clearly, act professionally, and avoid triggering regulatory concerns. This is particularly important as banks are legally bound to avoid speculative engagement without formal policy backing. Within Iraq, statements from senior government advisors, like Salih from Prime Minister Soudani's team, offer further insight. Salih attributes fluctuations in the parallel market's USD/IQD rate to geopolitical influences rather than domestic economic weakness. Specifically, the Iran-Israel conflict has created what he calls information noise, fueling uncertainty. He reassured that the Central Bank of Iraq maintains a fixed exchange rate backed by strong foreign reserves that now cover more than 15 months of trade, far exceeding the standard 3-month requirement for macroeconomic stability. Despite this financial cushion, analysts like Sandy Ingram warn that unless Iraq shifts toward a managed float or embraces major reforms, real appreciation of the dinar will remain limited. The current fixed-rate system provides stability but doesn't allow Iraq to harness the full potential of its currency on global platforms. Floating the dinar, if paired with strong fiscal policy and transparency, could revolutionize its value and reach. In conclusion, Iraq appears to be on the edge of transformation. The pieces are aligning: cleaner institutions, enhanced reserves, a move toward digitization, and improving compliance. The central bank and other key agencies are beginning to work in greater harmony. Yet the climb ahead remains steep. Global trust must be earned, transparency must become the norm, and both domestic and foreign currency holders must prepare themselves strategically, not emotionally, for what's coming. The revaluation of the Iraqi dinar is no longer just a fringe theory or hopeful dream whispered in financial forums. Tangible steps are being taken, real reforms are in motion, and the global community is starting to pay attention. The real question isn't whether Iraq will rise again, it's how soon, and whether investors are ready to respond when it does.